Well, let's start off with BHP and Rio. Both the deal itself and also the getting out of liquid fossil fuel angle, which brings in Woodside as well.
That's right, mate. As you saying, good morning. BHP becoming much more like Rio, effectively trying to divest itself of liquid fossil fuels, doing a deal potentially with Woodside, a $20 billion deal. Now, this is a big deal for a whole lot of reasons. It makes the big Australian a little bit smaller, firstly. This is going to be done by an issue of shares rather than a cash amount that BHP will otherwise be able to respend. So makes BHP smaller. It also moves them out of liquid fossil fuels. As we said, there's a couple of things here. The first is it takes that risk off the table. The second, on the flip side, is it makes it less diversified, but it also moves the company further away from contentious exploration, contentious drilling. It has been one of the more vocal supporters of action on climate change, for example, and this kind of gives it a cleaner path toward that. If it's going to be at the forefront of that argument, of that plan, and you assume it's doing it for both commercial and probably political or investor reasons, it basically lets it say, look, we're out of that area now. And it also marks, I think, to some degree for resources investors, a reminder there's going to be probably, I won't say good and bad because that's assuming a lot of stuff, but I think we'll find a lot more businesses that are, frankly, taking the climate change risk, both, again, investing, economic, political, and those who are saying, you know what, we just don't want to be in that space. We want to be the other side of the business. AGL doing something similar in energy, of course, trying to find a way to get rid of its coal-fired power plants and make itself a retailer and a renewables provider. I think we're going to see much, much more of that in the weeks, months and years ahead.
So, but what about Woodside? I mean, it may well be a critical choice, but does it end up being a smart play on their part?
I think it does. It gives them a whole lot of scale. It's already involved in some projects with BHP already, so it consolidates that. It gives them a bigger, better footprint. Let me spit that out. It basically gives them opportunity in the Northwest Shelf of Australia, in the Gulf of Mexico as well. It makes it a much larger global player. And in a business where, frankly, scale is starting to matter even more, exploration continues to get harder. It continues to get more expensive. Now, they're doing it well across the globe, Woodside and others, but you've got to be bigger. You've got to be more committed to this space to afford and to fund that sort of exploration, that sort of drilling. And it does give Woodside, I think, a bigger opportunity to be a bigger and better player on the world stage.
Okay, well, let's move on to JB Hi-Fi. Had a great year. Particularly because people in lockdown were just buying up things, getting all manner of things from JB. It helped the stock price. But when 2021 comes around, a little underwhelming.
You've nailed it. And this is the big challenge for the companies and their investors. If you look at JB Hi-Fi's results, grew profit by 2/3, 67% year on year, which is a phenomenal result up until June 30 last year. Of course, we know we bought TVs and computers and monitors and all sorts of gear from JB Hi-Fi to get us through lockdown. They've got a cycle on that year, and the first 6 weeks of the current financial year, the new one, haven't been as pretty. Sales are down 15% for JB Hi-Fi versus last year in the first 6 weeks of the year. Now, I should say it's still up on 2019, so it depends on what you compare against. But a reminder for everybody that that one-off hit was great for the company in 2020. It won't be repeated this year. It's also, by the way, Pete, from an economic perspective, a reminder that the kind of coiled spring economic growth that we had coming out of the first set of lockdowns, we kind of all rushed out and went, oh, okay, things aren't so bad. Let's jump online. Let's buy our stuff. We've got it all now. Okay. And so that's not being repeated in the current year.
Okay, a quick look at two more. Bank cost cutting continues with CBA, Scott.
It does. 100 jobs being offshored to India. A reminder, with all the talk about onshoring and doing it locally, there is still a big trade in sending jobs overseas. The banks have to cut costs harder and harder. We know that underlying profit at CommBank was only up 1.7%, despite the 20% headline growth. It's going to have to keep cutting costs for years. You expect more job offshoring, you expect more branch closures as well.
And we've got 15 seconds, but is A2 milk being saved by Nestle, Scott?
The share price was yesterday. No confirmation from either party just yet. It's all speculation at the moment.
Okay, yeah. Well, that A2 milk has taken a pounding. I think it's gone from $20 a share down to $5 or $6 or something like that. So
spot on.
Maybe a buying opportunity there for people. Let's see. Well, we might have just missed the boat if Scott's saying yesterday it jumped up. Good to see you, Scott. We'll talk to you soon.